Have you ever wondered of how trading will feel like if you combine the two strongest, easiest, and most popular trading strategies in the market together, the trend line and the order blocks? Here is what happens. You create an atomic strategy, a strategy that when used correctly, trading it will feel like you own and control the market. I have been trading the trend lines for a long time now, and this has been the basis of my trading strategy. One thing I love about the trend line is that the trend line has a way of making trading very much easier when trading it according to the rules that guides it. The trend line works in connection with the main movement of the market, while on the other hand, the order block gives us the best trading entries based on the overall market structure, helping us to get into the market early, reducing our risk by almost 60%. Will this be the trading strategy of the century? Well, let's get into that, step by step. But before we get into all of that, do well to like this video and subscribe to our channel. If you are encountering us for the first time, now my tribe soldiers, let's get down into this business. The first question is, what is the trend line? And how does the trend line really work? Alright, a trend line is like a support and resistance line, but this time, it is inclined vertically, you see. Just as the support and resistance lines helps us to understand traders' activities in the past, around a particular area in the market, and then help us to predict the next move of the asset. The trend line also helps us to get those trading activities, but this time, according to the main direction of the market during that period. We can say that the trend line is focused on the trending movement of the market, while the support and resistance is more focused on the overall market structure. When you draw the trend lines, your goal is to draw them accurately in such a way that when price returns, it can give you a signal to join the trend and enjoy a good trade. There are two different ways we can draw the trend lines in order to get them accurately, and there is a way that you should never draw the trend lines to avoid losing trades. Accurate trend lines can be drawn in two ways. The first way is to draw the trend lines on the candle's wicks. When you are drawing the line on the candle's wicks, you must make sure that the line is only on top of the wicks. Make no mistakes about that. When you draw the trend lines this way, you have locked in for accuracy. You get the best out of the market. You are absolutely direct with what you want. When you draw it on the wicks, there is no need to twist the lines and move them in different directions. You are focused on just one direction, just like an eagle, no distractions. The second way of drawing the trend lines is to draw them inside the wicks. This pattern is for traders who want more trades from the market. When you are drawing the trend lines inside the candle's wicks, you can get more trades from the market using your trend line. The only problem I see with traders using this trend line drawing pattern is that they keep switching the directions of the trend lines inside the candlestick's wicks. They move the lines as though they are captains on a ship, using a compass for direction. It's crazy, but as a tribe soldier, listen, when drawing your trend lines inside the wicks, it is best to draw them close to the body of the candlesticks. For example, instead of drawing and switching the trend lines like a navigator, you draw it on a stable position, close to the body of the candles like this. This way, you can get more trades using the trend lines. The only thing you don't want to do with trend lines is to draw the lines on the body of the candles. This is the wrong way of drawing trend lines. When you do that, you get a lot of false signals, leading to plenty losses on your account. I will reveal the trend lines drawing pattern that we are going to be using for this strategy soon. But for now, let's understand how order blocks truly work in the market. Order blocks are areas of supply and demand in the market, usually marked out by certain type of candlesticks or candlestick combinations in the market, and there are many names for this different order blocks candle moves in the market, and this confuses a lot of traders, but I strongly advise that you should not waste your time learning too many of them. The two major order block moves you should know as a trader are the base order blocks and the flip order blocks. But before you use the base order blocks and the flip order blocks, there is one concept you must always respect while trading the order blocks. This concept is very important. It is called the break of structure. A break of structure occurs when the market moves above the current high or below the current low of the market structure. For example, if you are in an uptrend and price moves above the last high, it is called a break of structure, and if it moves below the last low, it is also called a break of structure. The both of them are called a break of structure, but what matters the most is the size of the structure and the strength of the preceding trend. It is when you already have a break of structure that you should start looking out for the base order block or the flip order block. You get a base order block at the base of the last price movement before the break of structure, and the flip order block at the point of the break of structure, the zone where the market broke the structure, and that is only after price has moved beyond the price level where it broke the structure. So at this point you can draw your order block so that when price returns to it, you can then find a signal to trade. It's almost the same thing with trading the base order blocks, except for one exception, and that, I will tell you, when you are trading the base order block, you must not allow the market to break out too far from the last high or low of the break of structure. You want a quick retracement to the order block right after the break of structure. If the market keeps rising after breaking the high, and it has gone too far from the breaking point, do not expect to return to the base order block again. If the market returns back to a base order block after a long movement like this one, it's definitely not going to give you a good trade by the time it returns to the base order block. Instead, check if the market dropped an order block at the flip zone so you can get a better trade with a closer order block. If you are a total beginner to order block trading, do check out our full course on order block trading here. Alright, now that we know more about the two trading strategies, let's see how we can combine the both of them to create one of the most powerful and easiest trading strategy of our time. But before we get into all of that, let me introduce you all to the sponsor of today's video, Bybit. Looking for the best crypto exchange where you can also trade forex currency pairs on one account? Bybit got you. Do you want an exchange where your cryptos and money are safe from hackers and scammers? Bybit got you. Now, you must be looking for an exchange where you can easily deposit your funds with multiple payment options without going through multiple stress to deposit. Bybit got you, my brother. With Bybit, you are in control. Trade anytime you like on hundreds of assets available in the trading market, all the way from crypto spot trading, futures trading, forex trading, and a lot more, as you pay less money in trading fees to complete your new account registration with Bybit today. Click on the link in the description box below. Now, let's get back into our strategy. Now, here is how our strategy works. To trade this strategy, the first thing you have to do is to open your chart to one time frame. Pick the best time frame suitable for you as a trader. Either you a swing trader, a day trader, or a scalper. Make sure to pick a time frame that suits your personality. We will not be doing any top-down analysis for our strategy. All we do is focus on one time frame. For me, I like to trade with the 15 minutes time frame. As I am a day trader, you can choose the one that is best for you. Now, when you are on your chart, the first thing you do is to identify the trend direction and then draw out your trend lines. When trading this strategy, you draw your trend lines according to the first pattern of drawing trend lines, of which I told you earlier, which means you will draw your trend lines on the wicks of the candles. This way, we know we are focused on one direction, and we are not looking for quantity of trades, but for the best quality trade possible. Alright, when we have drawn that out, then it's time to draw out the order blocks. On this chart, we drew out the order block from the base, since the market did not move far from the point of the break of structure. When you have drawn it out like this, you wait for the market to return to it, while touching the trend line at the same time. This is a great confluence, and when it happens like this, you know you are in for a big trade But you are not going to jump into a trade right away. You get to be as patient as a man waiting for free food. This time you are just one step to taking the trade. But here is the problem. Sometimes the market can touch both the trend lines and order block and still move beyond it. So instead of trading with a limit order, we must wait for a signal candlestick. We can use the engulfing pattern for this assignment. The engulfing candle is the best trading signal in the market, and it's perfect for this strategy. But before we look out for the engulfing candle, we must first of all make sure that the market does not break a structure. The market can move beyond the confluence area, but it must not break a structure. If it breaks a structure, then that setup becomes invalid, and you will have to wait for the next one. Now, with all that in place, when the market finally touches the confluence area and an engulfing candle forms, we can then take a trade, placing our stop loss below the engulfing candle and our take profit target at the next high, thus giving us a beautiful trade. Now, to make you understand better, let's take a few more examples of this strategy at work on the chart. Here we have the market moving in a downtrend, so we first draw out our trend line, and after that, we draw out our order block. And then we wait to see what the market will do next. If the market retraces to our order block faster, after breaking out, then we can expect a good trade by the time it touches our spot. And as you can see here, the market behaved like a gentleman and moved up. And right here, you can see the market touching the trend line and the order block zone at the same time. And then we have our bearish engulfing candle here. And from there, the market moved down. In a case like this, we place our stop loss above the engulfing candle and our take profit target at the next low. And this would have been a wonderful trade with lots of profits. Now, let's see another example of this strategy on the chart. Right here, you can see that the market is moving in an uptrend. See the higher highs and the higher lows. So we draw out our trend line and then our order block. Remember the flip order block we discussed about earlier? Alright, right here, the market returned to the trend lines and the order block, creating a strong confluence. And right here, you can see that a bullish engulfing candle formed, and with this, we can enter a trade, placing our stop loss below the engulfing candle and our take profit target at the next high. And that's it. Another successful trade. Remember that we are only using this strategy on one time frame. This strategy is not to be used with top-down analysis. Focus on just one time frame. And there we have it, guys. The work have been done for you guys. If you have any questions, drop them in the comments section. And don't forget to join our Telegram channel for raw trading knowledge that I can't upload here on YouTube. Now, in the next video that will appear on your screen right now, I will be teaching you all on how to trade liquidity from the beginning to the end. Click on it and see you there, Tribe Soldiers.